So thanks to King Jake 26 for recommending this great stock today. This is Capricor Therapeutics, which is a biotech company currently valued at around $165 million and at a stock price of $5.17. So today I'm going to be taking you through the bull points and the bear points for this company, and at the end we're going to be taking a look at the stock price and where I think that might be heading. Now I think this is a stock with real opportunity, so stick around to the end to find out more. The core offering for this company is deramiocel, which is a therapy for Duchenne muscular dystrophy. And the potential for this drug is quite significant. If we click in here, we can see that they've said that a small market penetration could exceed $1.5 billion. And on top of that, they say the global market is estimated to be around $27 billion by 2030. Now, a big caveat that I would say to this is the bear point here, which is that their partnership that they currently have means that a lot of this will be going to their partner. With this deal, they'll only be taking around 30 to 50% of the revenue. So for example, that 1.5 billion might actually only be around 500 to 800 million. However, this is still a significant amount for a company currently only valued at $165 million. And on top of that, with the benefit that this drug provides, I'm hoping to see a much larger market penetration. So one of the big things supporting the deramiocel potential are the great phase 2 results. And if we click into here, and if we go here, we can see that there's been a 71% slowdown in the skeletal muscle progression and 107% slowdown in the cardiac disease progression, and that's been sustained for 3 years. And thanks to Penny for your buck for pointing out what a big deal this actually is. The cardiac disease progression is actually what kills a majority of patients. And so to have 107% slowdown in this is a big deal for the drug and could be one of its top reasons for selling. So next in the list is the Nippon Shinyaku partnership. So I did mention this before as a bear point because they're not going to be able to get that amount of money, but overall I think this is a good deal for the company. The company doesn't have much cash, and Nippon Shinyaku have been providing that cash so that they can continue the research on this therapy. And on top of that, they've offered $1.5 million of milestone payments, which again is very significant for a company currently valued at $165 million. So next is that they are hoping to extend into Becker muscular dystrophy, and of course this will mean extra revenue for the therapy that they already have in place. So on to the negatives for the deramiocel potential, and the top of the list here is the fierce competition. So if we click into this, get some more details. So I've mentioned here that you can go into the 10K and you can see numerous existing drugs and drugs in the pipeline that could threaten the success of deramiocel. Personally, I think the biggest threat of these is the Elevidys gene therapy from Sarepta. They are already predicting that this is going to pull in close to $3 billion in its second year. And although it's not currently clear, it could mean that these patients will not be in need of deramiocel. Of course, we'll have to see what the future holds, but this fierce competition is what I think is the biggest threat to an investment in this company. The next in the list we've already discussed, that's the partnership deal restricting the top line growth. And then we go back to the top. So next in the list is the StealthX potential. Now, StealthX is a platform for exosomes, and exosomes is the delivery method being used by the deramiocel. So what Capricorn have done is obtain a number of patents for this process, and they're now looking to open that up to potential customers. So now they have 3 trials in place, and one of those is for a COVID-19 vaccine. So if this becomes successful, then it could mean a significant revenue for Capricor. And if we click in here, there's a link there if you want more information. But in the ER, Linda Marbin does mention that they have more interest about this than ever before. So that now brings me on to the bear points. And there's only a couple of bear points about the company that I found at this moment, but the first one is quite a big one for me, and that is that there is no backup plan. Currently for me, it feels like they are hinging on the success of deramiocel. Of course, they do have this StealthX platform, but I think without deramiocel, it's going to be very difficult for them to complete that work. So if you were to invest in this company and deramiocel were to fail for any reason, then there's a good chance that you'll lose a majority, if not all of your money. Of course, you have to weigh this against the fact that if everything were to go right for this company, then you could quite easily 10x your money. So it's about doing your own DD and balancing your own risk tolerance to the rewards. So the next bear point is that they have very little cash. They have enough cash now for about 6 quarters. So again, they really need to make sure that their EMEA sale performs as expected. So let's take a look at the upcoming catalysts. And the first in the list are the phase 3 results. Now they're expecting these before the end of the year, and I think this could be a really significant catalyst for this company. I think this has the potential to double or perhaps even triple the stock if these come out very positive. And on top of that, we have the Q3 earnings report that's estimated to be around the 4th of November. And in that earnings report, I'm really hoping to see more colour on the phase 3 results, the Becker muscular dystrophy, and the accelerated NDA submission. For those of you that don't know, you can very easily subscribe to these catalysts by clicking here and clicking create. There we go, you're subscribed. You can also do that for points as well. If you're logged in, it's easier, but if you're not, you can just provide your email address. Okay, so that actually completes all of the bull and bear points for this company. So let's go over now and take a look at the stock price. As you can see, it's currently sat at $5.12, and it says a market cap here of 143, but I think that might be out of date. StockTwitch is showing that at 165 million. As you can see, it's had a very tumultuous year. We've had lows here of around $3 and highs of around 7. So it's actually much lower than the highs of the year, and I think it's in a better position now than it has been all year. They just recently signed the Nippon Shinyaku deal, and they now have a cash runway until 2026. They're also expecting the phase 3 results out any time now before the end of 2024. I think this is a really exciting time for the company. If the phase 3 results come out and they're positive, I really think we could see a double or tripling of the stock price as it currently is. There's no guarantees, of course, and anything can happen. And as I mentioned before, I do think this is an all or nothing company, so all of your money could potentially be at stake here. However, after saying all of this, I definitely do think that the rewards outweigh the risks. So I've actually put down a position in this company, and I hope it does well in future. I hope this video has helped some of you out, and as always, of course, do your own DD. And don't forget to like and subscribe because I'm finding great new stocks all of the time.